Hi, I wanted to give an update on the Sentry US monthly income fund in the context of the third quarter of 2020. At the end of the third quarter, the S&P 500 was at record levels set in February of 2020. We continue to expect that US equities will deliver positive returns going forward, given that we're seeing improvements in therapeutics, vaccine timing, employment and payrolls data. There's some good data coming out of the auto market, the real estate market. The savings rate has been very healthy for US consumers. And of course, existing fiscal and monetary stimulus should continue to support spending. Although Biden is ahead in the polls, most of the uncertainty in the U.S. election race was removed with Biden winning the Democratic nomination. Obviously, the election outcome is unknown, but with a sweep, the Democrats are likely to push a front-loaded fiscal expansion spending, which would be positive. However, potentially higher taxes and regulations mean a potentially negative impact on medium to long-term growth. However, overall, we remain constructive on U.S. equities. On the chart to the right, you can see that the 10 U.S. Treasury sums up the Fed action to keep rates low to support the economy for the considerable future. Given the Fed will likely let the economy overheat a bit as their focus shifts to higher average inflation above 2.5%, and of course higher spend if the Democrats sweep, we may actually see some inflation. However, our view is that we will not see that until late 2021. Consequently, our overall asset mix is largely unchanged at 64% in U.S. equities and 36% in fixed income. On this chart, you can see outperformance of the mandate relative to the peers. Some of the contributors to this outperformance is one, United Parcel Services, which is a packaging delivery business. The stock performed very well during the third quarter because of tailwinds, including a shift towards e-commerce. Also, MasterCard did very well for us in the third quarter. The stock rose because of recovery in consumer spending. One of the detractors in the quarter was Cigna, which is a health insurance company in the States. The stock declined due to concerns about regulatory changes following the upcoming November election. However, we remain owners of the stock because we think the company can manage through this intermediate term headwinds and grow the business. Our outlook is that we continue to expect volatility to remain elevated as the market grapples with a second wave of COVID-19 and the economic ramifications that will continue to unfold over the coming months. Expect the upcoming U.S. elections and concerns around its legitimacy to contribute to volatility. We continue to place an emphasis on balance sheet resiliency and liquidity, which is critical to allow businesses to survive in an uncertain macro environment. We continue to favor a barbell approach, owning names with secular tailwinds that endure any economic environment, as well as a business with some short-term headwinds but trading at prices well below their intrinsic value. Thank you.